And welcome back. There's some very interesting dynamics occurring in our US housing market right now. So for example, last week, we actually saw the smallest increase of asking prices going back to June of 2020. Now, having said that, we're still seeing triple-digit increases in the number of reduced price listings. Additionally, we have been seeing huge increases in average mortgage rates over the past 3 weeks. So in today's video, I'm going to take a breakdown of what's happening right now in our US housing market regarding home prices, housing inventory, price reductions, and of course, much more. And of course, if you guys appreciate these timely housing market updates, then I invite you to subscribe to this channel if you haven't done so already. And with that said, let's go ahead and dive right in. And this video is a weekly video I make for you guys regarding my own analysis of Realty.com's data. They just posted this today, which is the 23rd of February here. And this article right here, I did not read. So instead, have a look at this because I actually uploaded their most recent week, which is for the week ended February 18th. When looking at previous weeks on my spreadsheet right here, or here I'll show you in a little bit, it didn't match up to this new report right here. So here's what they had to say at the bottom of their housing market update. It says, with the release of its weekly housing market trends views and data ended February 18th, Realty.com incorporated a new and improved methodology for capturing and reporting housing inventory trends and metrics. The new methodology updates and improves the calculation of time on the market and improves handling of duplicate listings. Most areas across the country will see minor changes, with a small handful of areas seeing larger updates. When I was actually looking at previous weeks before this update was released here, there was some very small changes here, so it doesn't really impact my analysis for previous weeks. It also says, as a result of these changes, the weekly data released since February 23rd, 2023, which of course is today, will not be directly comparable with previous data sets. So when looking at this, which is their most recent week, which has ended February 18th, the previous weeks will have some slight changes compared to the video I posted 1 week ago. For those of you guys who are watching this video who are more detail oriented, you probably will notice that these numbers here are slightly different, except for this right here, the number of reduced price listings. Anyways, moving on. So asking prices, look at this, a 6.5% increase last week, which is actually the smallest increase we've seen since June of 2020, the smallest increase of asking prices across the United States. Now, having said that, we've been seeing single-digit increases of asking prices for 10 consecutive months. Every single week back in 2022 posted double-digit increases of asking prices, except for December. In December was the first time we saw single-digit increases for asking prices in 2022. But of course, this year, every single week, we've been seeing single-digit increases across the United States. So that's a change compared to 1 year ago for the median listing price. Let's have a look at active listing inventory compared to 1 year ago, because last week that increased by 67%, a 60% increase in the number of houses listed for sale currently in the United States right now, a 67% increase. This is actually below levels compared to altosresearch.com. For the week ended February 17th this year, there was 436,000 houses for sale. 1 year ago, approximately 247. And by my nerdy Excel formula right here, that's a 76% increase in the number of houses for sale. I mentioned that because Realtor.com is reporting an increase of 67% and not 76%. There's a few more things I want to touch on regarding housing supply in the US, because at 67%, this is very close to the highs we saw back right here. The week ended January 28th, when housing inventory increased by 69.4%, now has increased by 67%. So very close to the 12-month high for housing inventory. And again, the increase of housing inventory is not due to a giant surge of new listings. In fact, housing inventory has been increasing for 18 out of the last 23 weeks, despite the fact we've been seeing declines of new listings for the past 33 weeks. So have a look at this, because new listings compared to 1 year ago has been decreasing for 33 consecutive weeks. On top of that, have a look at this, because new listings have been decreasing by double digits for the past 4 weeks in a row. So for the past 4 weeks, double-digit decreases compared to the same time frame of 2022. And on top of that, new listings have been declining by over 10% for 28 out of the last 30 weeks. The only weeks we saw single-digit declines were actually on January 21st as well as December 24th. And besides those 2 weeks, we've been seeing double-digit decreases going all the way back until July 30th last year. One thing that's definitely worth mentioning, this is super important because when reading these stats right here, it appears that new listings are decreasing. But that's not really the case though when looking at stats on a week-over-week basis. Because look at Redfin. Here's Redfin's data center for new listings across every single metro, and they track approximately 400 plus US metros across the United States. So new listings have been more or less increasing ever since January this year. As you can see right here, on January 1st, for example, there's approximately 37,884 new listings that hit the market. And for the 4 weeks ended February 5th this year, there was 62,686 new listings. So therefore, the number of new listings have been increasing over the past couple of months here. But as you can see right here, the current levels we have right now this year is still below levels we had back in 2022. 2021, as well as 2020. So for example, back in 2020 at this time, which is obviously pre-COVID, there was approximately 82,000 new listings. And again, this year, only 63,000. Now, having said that, when I actually exclude 2020 and 2021, only looking at 2023 compared to 2022, look at this, because the difference again is only down by 16.5%. Back in 2022, compared to the same time frame of 2021, we actually saw decreases by over 20%. Decreases by over 20% until we hit more or less right here. The 4 weeks ended November 6th last year. Therefore, the big picture here is that the gap between this year compared to last year is still below. We're still at lower levels compared to last year, but the gap between the previous year has actually been narrowing. Because again, for the 4 weeks ended February 5th, a decrease of 16.5%, whereas before that, it was actually greater than that. So for example, on January 1st, a decrease of 22.7%, 22.5%, so on and so forth here, where now we're only down by 16.5%. Let's also talk about how fast or how slow houses are selling in the US right now. Because last week, it took approximately 24 days longer to sell a house compared to the same week of 2022. So it's taking more than 3 weeks longer to sell a home right now versus 12 months ago. On top of that, houses are taking longer to sell compared to 1 year ago for 29 consecutive weeks. And by the way, this 24-day increase compared to 12 months ago is actually the biggest year-over-year increase going back to at least July of 2017, as far back as Realtor.com's data goes. Again, a friendly reminder though, when talking about days in the market, this is based on closed home sales. Therefore, this is a lagging indicator. Let's also talk about the number of reduced price listings in the US, because that increased by 148.5% last week. Although this has decreased for the past 2 consecutive weeks, we've been seeing triple-digit increases in 14 out of the last 16 weeks. In other words, a huge increase in the number of reduced price listings over the past several months. So that was the number of reduced price listings. Let's have a look at the share. Because according to AltusResearch.com, the share of price reductions for the week ended February 17th this year was only 31%. Going back to mid-November, which is November 11th last year, the share was 43%. This means the share of price reductions has decreased by about 12 percentage points over the last 3 months. On top of that, at 31%, this is actually the lowest levels going back to early July last year. And let me share exactly what I mean. So current levels right now at 31%. So 3 of every 10 houses for sale right now have already reduced their asking prices, 31%. Going back to right here, more or less, early July, we're right now at the lowest levels since early July last year. But also at 31%, this is still much higher compared to the past 4 years though. So 1 year ago, the share was at more or less 18%. 2 years ago, about 18%. And 3 years ago, back in 2020, right at the onset of COVID here at 25%. And obviously pre-COVID back in 2019, the share was 27%. So again, even though the share has been decreasing ever since more or less December last year, the current levels right now at 31% is at least a 4-year high. Also for asking prices, housing inventory, new listings, etc., I also want to share how that compares to years past, going all the way back until 2018. And again, Realtor.com's data, or their weekly data, only goes back to July of 2017. So obviously back in 2022, as well as 2021, our housing market was on fire. A giant increase of asking prices, inventory absolutely tanked because we saw a huge increase in demand. And of course, the number of reduced price listings absolutely fell off a cliff. The most recent year to compare this last week here is probably 2019 compared to 2018. In 2018, rates were increasing. They went from about 4% up to about 5% by year end in 2018. So back then, asking prices increased by 7.8% compared to the same time frame of 2018. Whereas this year, we saw a 6.5% increase. Also, this is kind of my biggest aha moment here because look at this. Housing inventory only increased by 5.4%. Whereas this year, an increase of 67%. And obviously, the number of price reductions only increased by 17%, whereas this year, it increased by almost 150%. All right, so I know that was a lot to cover in today's video, so I actually want to provide a summary for you guys as well. So number one, inventory has been rising on a year-over-year basis for 18 out of the last 23 weeks. It also increased by 67% last week, according to data from Realtor.com. This growth rate is also very much significant given the fact we've been seeing fewer new listings compared to last year for 33 consecutive weeks. However, the number of houses for sale or housing supply has been more or less on a downward trend ever since November last year. We're currently at the lowest levels since June of last year regarding housing supply. Also, new listings have been decreasing by double digits for 28 out of the past 30 weeks. And number two, mortgage rates in general had been on a downward trend this year until it hit February 1st this year. So average 30-year fixed rate mortgages, or the average rates, went from 5.99% as of February 2nd. Now, as of today, which is the 23rd of February, rates have increased to 6.8%. Again, these are average rates according to the Mortgage News Daily for people with exceptional credit, of course. So number three, we saw a huge increase in the number of reduced price listings over the past few months. We also saw triple-digit increases compared to 1 year ago for 14 out of the last 16 weeks. However, though, the share of price reductions, according to Altos, had been more or less on a downward trend since mid-November last year. This could be due to the fact that inventory has been decreasing over the past 3.5 months. And number four, houses are taking longer to sell compared to the same week 1 year ago for 29 consecutive weeks. Again, though, this is a lagging indicator. So what are some potential huge changes ahead, given the fact that rates have been more or less above 6% ever since October 1st, and on top of that, rates have increased approximately 80 basis points or 0.8 percentage points over the past 3 weeks. Number one, average rates have increased approximately 2.6 percentage points over the past 1 year. This causes a 26% decrease in buyers' purchasing power. And number two, housing affordability is still very much a big issue. It was improving when prices and rates were decreasing, but now we're seeing just the opposite because rates have increased so much in February. So for example, for home buyers looking to buy a $400,000 home, putting 5% down, your average monthly housing payment is going to be approximately $220 more per month compared to just 3 weeks ago, based on the surge in interest rates going from 5.99% to 6.8% 3 weeks later. And obviously, this is a huge increase in the span of just 3 weeks, an increase of $220 per month for someone buying a $400,000 home, putting 5% down. And number three, the National Association of Realtors reported a small decrease in home sales compared to last month. However, based on my own analysis using their data, the rate of home sales in January fell to the lowest levels since October of 2010. Obviously, we need more data to gauge where our housing market's headed, especially during the spring home buying season. One thing that's almost certain here is that our housing market direction is going to be highly dependent on the direction of mortgage rates. And speaking of that, to combat inflation, the Fed increased the federal funds rate by 25 basis points on February 1st this year. This, of course, increases interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans as well. However, on the opposite end of the spectrum here, we're also seeing an increase of interest rates for savings account as well. So some online savings accounts are offering rates above 3% on your money, which is obviously much different compared to 12 months ago. We're also starting to see inflation start to cool down, but not by very much at all. Inflation is remaining very sticky, to say the least. Rate hikes by the Fed are expected to be smaller this year compared to last year. The street is expecting the Fed to increase rates by 25 basis points in March and May, as well as another potential rate hike by 25 basis points this June. In comparison, the Fed raised rates by 75 basis points 4 times in 2022. And of course, how much the Fed decides to raise rates this year will depend on incoming inflation data. And number 5, how will homebuyers react to the fact that rates have increased from 6% to about 6.8% in 3 weeks? I would imagine that cancellations will probably be increasing, as well as some people putting their plans on hold to buy houses. Yet some homebuyers may have locked in their rates when rates were closer to 6% before rates increase. So therefore, we could see a slight bump potentially in home sales in the next 1 to 2 months. However, though, we'll have to see about that because the MBA just reported a few days ago that the number of people submitting applications for home loans to buy houses has now fallen to its lowest levels since 1995. This is obviously telling me that home buying demand is decreasing big time, given the fact that rates have been surging. Any case, number 6. We're starting to see some early signs that demand is once again decreasing. So mortgage purchase applications have decreased in 3 out of the last 4 weeks, according to data from the MBA. Also, it's down by 41% on a year-over-year basis. However, new home sales have been increasing slightly over the past 3 months. That was for October, November, and December. And that's according to the US Census Bureau. I will have January stats in probably a day or so once that's released. And of course, I'll make a separate video for you guys as well. And number 7, I would not be surprised at all to see negative year-over-year price growth very, very soon, probably next month or the month after that, because back in 2022, home prices were absolutely skyrocketing, and so were home sales, whereas this year it should remain relatively subdued given the surge in rates over the past 12 months. And like I mentioned right here, once that happens, negative year-over-year prices is going to be all over the media here. But of course, it's not going to be a surprise for you guys who follow my channel here. And number 8, these videos, especially this one, take me hours to make. So hope you guys appreciate that. And of course, if you haven't subscribed just yet, I invite you to do so. I post frequent housing market updates so you guys can make a more informed decision about whether you should be buying or selling a home. And with that said, I appreciate you. We'll see you on the next video.